So the final part is your proceeds from the issue of share capital and your dividends paid. So to work out your proceeds from share capital, it's quite straightforward. You literally just take the difference, same way what you did with liabilities, but you do it for share capital. You would just add what your equity was. Just add your equity at the beginning of the year. So you just do 225 plus 127. As we can see, it's increased, yeah? Equity has increased this year. And then you would just minus it from what it was previously. So minus 200 minus 110, and that gives you 42. Okay. Um, so perfect. That's 42. Wonderful. So with regards to doing the other one, which is so basically what you do here is for working out how much dividends you paid in the year. All right, you take 306 because that's what you would expect, right? Is the link between the income statement and the balance sheet. You would expect the revaluation reserve. I mean, not the revaluation, retained earnings. So you'd have 306, and then you've got profit for the year. Yeah, profit profit after tax, so profit for the year 81. So what you would expect is if you didn't pay any dividends, you would expect that 306 plus 81 to be your retained earnings, which was 387. It's not. So 306 plus 81 is 387. Your revaluation reserve, I mean your retained earnings are 340. So to minus 340, yeah, so you minus 340 from that, and you get 47. So they're what the dividends you paid, yeah? Okay, so they're the dividends you actually paid. So what you then need to do is you look at this amount. So you've got dividends that you're carrying forward in 2016 and dividends that you also paid here. So what you need to understand is that 47 has come out of here, but some of it is in here, okay? Because it's a mixture of 23 and 28, some of which you've paid, some of which you haven't. So what you do again, take the difference between this number. So you can do it. Yeah. So what I would do is I would take 28 in 2016, 28 minus 23, which is 5. Okay, but that 5 then needs to be taken away because we've increased it. We've increased our dividend, but that increase hasn't been paid out yet because it's sitting on our balance sheet still. We still need to pay it out. So that increase of 5, yeah, which is not cash because it's the difference between here. If this number's gone up versus that number, you have an increase. You need to reduce the dividend amount because you haven't paid it all. Yeah, because you already owed this 23, which you've paid, but you now owe 28, but the difference between the two is 5. So you need to reduce the dividend paid amount because you're still going to hold out and pay a bit more, but later on. So you take the difference of these two, 28 and 23, and you minus it from your dividend amount, giving you 42. And that is the dividends that you've paid. And remember, this is all to do with your cash amounts, okay? Everything's to do with cash. You're always looking at the amount of cash that have come in and out of your business, okay? And so here what you need to look at, again, is you just sum up, as you have done each time here, sum it up from each area, from each activity, and then you work it out at the bottom, and you've got net increase in cash and cash equivalents, and then you take cash at the beginning of the year, which that 6 comes from your balance sheet here. Yeah. And that change, so you just do 8, your reduction, minus from the 6, and you've got 2. Okay? Minus 2. All right. Okay. So that is it. That's your cash flow statement. If you've got any questions, let me know. Okay?